Good morning, traders. Welcome to BCR's daily market update. We've got a lot happening today. The US dollar is bouncing back slightly. Oil remains under pressure. Gold is flirting with $3,000, and the Australian dollar struggles against trade risks. Let's break down today's key market moves and what's driving them. The US dollar saw a small rebound on Thursday, briefly reclaiming the 104 mark after lower than expected PPI data and solid jobless claims, but it's struggling to hold onto gains as recession fears and tariff uncertainties continue to loom. Trump's threat of a 200% tariff on European wine and champagne added a fresh layer of risk to the markets. Technically, the US dollar index is hovering around the 103.8 mark, still near the multi-month lows. Oversold conditions on the RSI and MACD suggest sellers may be taking a breather. But if 103.2 breaks, we could see a drop towards 103 and 102.52. If the dollar manages to push above 104, resistance at 104.05, which is the 8-day simple moving average, and 104.66, which is the 10-day SMA, will be the key to watch. Oil prices remain under pressure, with WTI falling to 66.5 as the IEA warned of slowing demand due to escalating trade war, but a smaller than expected US crude inventory build provided some relief, signaling that demand is holding up better than feared. From a technical perspective, WTI is still bearish, but if price breaks above 67.86, which is the 14-day SMA, we could see a test of the $70 psychological barrier. On the downside, if WTI falls below $66, it could target 65.88 and 65.05, with traders keeping an eye on US tariff developments for further direction. Gold soared to a record high of $29.89 on Thursday, getting closer to that key $3,000 level as the US trade tensions and Fed rate cut bets fueled demand. Despite a slight pullback, gold remains strongly supported by safe haven flows. Looking at the technicals, gold is still in an uptrend, but we're seeing some signs of momentum slowing. RSI is above 60, while MACD is flattening, suggesting a possible breakout soon. Key support levels sit at 29.56 and 29.30, while a break above the 29.90 mark would open the door to $3,000 and beyond. The Australian dollar fell to 62.80 as Trump's trade stance boosted the US dollar. Despite softer US inflation data, investors focused on growing trade risks, keeping pressure on risk-sensitive assets like the Australian dollar. Technically, the pair is holding above 62.97, which is a 9-day SMA, suggesting short-term momentum is still intact. Resistance sits at 63.52, which is the 100-day SMA, and 64.09, which is the February 21st high. If support at 62.58 breaks, we could see a drop towards 62 cents again. That wraps up today's morning market analysis. Keep an eye on US tariff developments, oil demand trends, gold's push towards $3,000, and the Australian dollar's reaction to trade risks. Stay sharp, manage your risk, and I'll see you in the markets. Happy trading.